Sarah Bumgardner with AAFMAA, the American Armed Forces Mutual Aid Association. Since 1879, we have been serving our military community, and our mission is to be the premier provider of financial solutions for the armed forces. And as a director of partnership and member engagement, I talk with other nonprofit organizations about what they are doing to help service members, their families, veterans, and the military community at large. And today's topic is we're going to be talking about taxes. 3 things all service members need to know for tax season. If for some reason you are unable to join for this entire segment, you can find in the comments a way to subscribe to AAFMAA so that you can get all of this information right at your own fingertips. So today I have Brittany Benassi. She is the Vice President of Financial Planning at AAFMAA Wealth Management and Trust in Fayetteville, North Carolina. She is a CPA, a military spouse, and works closely with AAFMAA clients to help them define their financial goals while on active duty and life after the military. Thank you, Brittany, for being here today.
Yeah, thank you for having me, Sarah. And just a quick correction, not a CPA, but a CFP, a Certified Financial Planner.
I do apologize, CFP.
It's okay.
Yeah,
That's all right.
Thank you for that. So for those who are just listening and not able to view the slides at the moment, you of course can view the recording at a later date, but today we're going to be discussing 3 things. We're going to be talking about the new TSP 401k contribution limits. We're going to be talking about saving in traditional versus Roth accounts and understanding state residency for active duty and retirees. And we have a bonus item today about some additional tax preparation advice that Brittany's going to tell us about. So to start off, Brittany, let's dive into the TSP contribution limits. What has changed?
Yeah, Sarah, it's a great question and something that you just have to kind of pay attention to every year. So basically what has changed is I'm using in my header here TSP 401k, 403b, and 457. These all have the same limits. And basically a service member can contribute up to $23,000 to their TSP. Now, if they're 50 and older, they can do an additional $7,500 to their TSP for a total of $30,500 to their TSP. So that almost always changes, and that are those are the new limits for 2024.
Awesome. That's great. What about what about if you did not contribute, say, in 2023, but you want to contribute more? Can you still do that at this time?
Yes. So it not necessarily in your TSP, no. The contributions for the current year are from January 1 to December 31st for your employer sponsored plan, which is your TSP. For military spouses, that may mean a 401k, 403b, or 457, but that date range still applies. But that is not necessarily the case for IRA and Roth IRAs. So you can make a contribution for the previous year up until April 15th of 2024. So let's just say you wanted to make a Roth IRA contribution for the year 2023. You would have until April 15th of 2024 to fully fund that Roth IRA.
That's awesome. So there's still time. So if you're just listening to this and you think, gosh, I didn't meet my IRA or my Roth IRA limit and I might want to do that, you still have a bit of wiggle room to do that now. What about saving, since we're talking a little bit about IRAs, what about saving in traditional versus Roth TSPs or IRAs?
Yeah, absolutely. So this is, a point that we talk about a lot when we're talking to our service members in financial plans. But basically, a traditional TSP is pre-tax. So basically, what that means is it will reduce your tax liability today. But when you draw down the assets, those withdrawals are subject to ordinary income tax. And additionally, they're subject to required minimum distribution. So, because you've kind of deferred the taxes for so long, the IRS will eventually come knocking and say, hey, we really want our tax revenue now, and we're going to ask you to take out required minimum distributions, which are based on a divisor that the IRS sets. So as opposed to Roth contributions, which are post-tax, meaning they won't reduce your tax liability today, but when you draw down the assets, it's 100% tax-free. So there are no required minimum distributions either from your Roth IRA. The IRS will never really come knocking, and your surviving spouse, in the event that you predecease him or her, will not be subject to required minimum distributions as well. And something that I kind of want to talk about too are the combat zone TSP contributions. So as many of our service members do, they deploy to combat zones. When you are in a combat zone, any contributions that you're making to your TSP while in that combat zone gets saved in basically a post-tax or post-tax bucket, which is essentially a Roth, right? The difference, though, between that combat zone TSP contribution and a Roth is that the growth attributable to that combat zone contribution is not tax-free. So really, as soon as eligible, having the service member consider rolling that tax exempt portion of their tax exempt combat contributions to a Roth IRA so that it's allowed to grow tax free. Of course, you're not allowed to do that while you're still on active duty status or an employee. If there are government employees out there contributing to TSPs as well, you're not allowed to do that until you're out of service.
Okay. That's a great tip for our service members. And it's one of the reasons why places like AAFMAA Wealth Management and Trust and Brittany do what they do, is to make sure that they're educating and telling our service members about these really useful ways to be able to optimize their TSPs and their savings. So thank you so much for talking about that. I also wanted to talk just a little bit, because we do get this question sometimes when we're doing transition briefings from military spouses who say, I don't work outside of the home. I'm running everything to do within the home while the service member is working outside of the home. Is there any type of saving vessel for them, like a spousal IRA or something like that?
Yeah, absolutely. So a spouse who is not working outside the home, who doesn't have any necessarily earned income, but let's say the other spouse does and is working, right? The non-working spouse is able to contribute to what we call a spousal IRA. Now, you just have to pay attention to the earned income limits, right? So if we're looking at the chart, if we don't mind flipping back to slide 1, I've listed some income limitations. And if you want a deductible IRA as a military spouse, then we just need to adhere to this range of modified adjusted gross income. And so for a spouse who is one spouse working, one not working, that range of income is $230,000 to $240,000 modified adjusted gross income. Now, I think this is where it might get confusing for some folks, as they say, okay, I may earn, maybe let's say I earn $235,000 modified adjusted gross income as a family. What that means is that you're subject to basically a calculation to determine of the contribution limit to the IRA, which right now is $7,000, and an $1,000 catch up if you're over 50. But let's just assume $7,000 for our folks listening are maybe under 50. There would be a fraction amount, a calculation to determine how much of that $7,000 you can contribute to a spousal IRA or even a non-spousal IRA. And what portion you can deduct, if that makes sense. So if you fall within these limits, there's a special calculation basically to determine what portion of that $7,000 you can contribute and deduct.
That's awesome. And that's also a great tip. It's a great thing for our military spouses to know that if you are not working outside of the home, your work within the home is incredibly valuable. You are maintaining everything and holding down the fort. And so, being able to save on your own, in your own account can be such a wonderful thing to be able to do. And also at the end of the day, right, it's just going to increase your savings as a family. If you have a service member contributing to a TSP and the spouse is now contributing to an IRA, you're just setting yourself up for better success. But again, there are some kind of nuances to that, which is why if you have questions about that, it's a great opportunity to reach out to our AAFMAA Wealth Management and Trust. They can certainly help you understand that a little bit more. So let's talk about our third item here with things to know about taxes is state tax residency consideration for active duty and retirees. I remember when my husband at the time was on active duty, we got to reap the benefits of having a home of record in Tennessee, not paying state income taxes. That was really nice. So walk us through what this means.
Yeah, absolutely. So the Service Members Civil Relief Act of 2003 basically says that in effect, service members are allowed to maintain legal residency in one state while physically being stationed in another state. So it protects service members from having income and personal property taxes assessed in both their state of legal residence and the host state, which is where they're physically present. So we often kind of use the term interchangeably. The military probably uses domicile more so than, than state of legal residence. But it is a place where the service member intends to return to after retirement. And then, kind of connected to that, is the Military Spouse Residency Act of 2009, which allows spouses to claim for tax purposes the same state of domicile as the service member, um, if they have established domicile there too. But alternatively, the spouse can also choose to file in the state in which they've established their own domicile. So it gives them a lot more flexibility. The one caveat I will just say about this is that, it's important to establish real connections in the state in which you claim domicile in order to not be subject, to any tax issues from, the state in which you are stationed.
Mm-hmm. That's great. And that's also a really great information for our service members because they're moving, right? Move every 2, sometimes 4 years. And a military spouse is also going along a lot of times with that service member. So this just gives everybody a little bit more leeway to make the right decision for them and their family when it comes to taxes within a state. And as we know, sometimes that can be thousands of dollars that a service member or their spouse could save. So I'm really glad that you kind of ran through all of that and what that looked like. Now we're on to our bonus item. We did say this was 3 things, but we're going to add one because it is tax season. And so we want to do tax preparation. And you've got some really great information for our audience here. If you could run us through this tax preparation services.
Yeah, absolutely. So I just wanted to provide some resources for service members or veterans who may need some help preparing their taxes. So there are a number of different organizations that can help. One is VITA, which I'm sure a lot of people are familiar with. So it is available to service member and military retirees. I included a hyperlink here just so you can look up by your zip code to see where there's any VITA representatives to help you. IRS Free File is relatively new. This just launched on January 16th, 2024. Now, it's guided tax preparation and is available to those with an adjusted gross income. And it's a little odd, but married filing jointly or single AGI of 79,000 or less. And so you can use this website to do IRS Free File if you fall within that. There is MilTax, which is through Military OneSource. So that services service members, spouses, dependent children, honorably discharged members of the military within 365 days of separation. And some surviving spouses also can do that. And then lastly, there's TurboTax, which offers free federal and state prep for simple tax returns for enlisted active duty reservists and National Guard E1 through E9. So those, as we're kind of approaching our IRS tax filing deadline, those are some resources for our military members to utilize, some free or discounted tax preparation services.
That's awesome. I'm so glad that you included these, because sometimes you don't know what you don't know, right? And a lot of times when you're going to file your taxes, you don't know maybe trusted resources that you can go to ask questions or to actually do the filing for you. And so as a service member, you have options out there. And here are 4 really great options. So I thank you for that. I really thank you, Brittany, for coming on today, for talking about taxes. It is, a subject that we don't really want to think about, but every year we have to think about. And so preparing for that can make it a little bit easier. For anybody out there who's listening, who heard something that they didn't know or they want some more information about, please feel free to reach out to Brittany. We have here on the slide the phone number, email, as well as our AAFMAA.com email. So there are multiple ways to get in touch with Brittany and AAFMAA Wealth Management and Trust to ask any questions that you might have. So thank you so much.
Yes, thank you. It's a pleasure, really.
Well, I'm Sarah Bumgardner, and that will wrap up our AAFMAA Live for today. If you would like more information about AAFMAA and financial readiness within the military community, you of course can subscribe to the QR code here on your screen. We also have that link in the comments section, so you can click directly on it and get more information. Otherwise, I thank you for joining, and I hope you have a great day.